All right, welcome back, everyone. I'm your host, Mick Attardo, teacher advocate and president of Set Sail Insurance Group. This episode is entitled Conflicts of Interest and Questionable Relationships, a PSA for teachers and district employees. It's meant to be a companion piece to our previous CalSTRS and CalPERS Pension 101 that goes more in depth into the politics and relationships that I've discovered between school districts, teachers' unions, and insurance companies. If you haven't already watched the CalSTRS and PERS Pension 101, I'll throw a link up in the corner for you if you're interested, and if not, you can also watch this on its own. So as mentioned before, when you go in for your pre-retirement counseling and you talk to one of the counselors, they might try to upsell you on the CalSTRS Pension 2 plan. So this is a TSA mutual fund plan through TIAA. And I've been told by teachers who are now my clients that they were previously sold this plan or pressured into purchasing this plan by a CalSTRS counselor. And they sort of positioned it as it was sort of like the only plan available or the only plan they should be looking at, officially endorsed, all of these different terms that sort of just made them feel like, you know, it was comfortable and trusting. But when in reality, there are, it's about 40 different companies to choose from. So keep that in mind when you do go in for your pre-retirement counseling, that this might happen to you. It might not. I don't think this happens to everyone, but it has happened in the past, as I've been told. So as I mentioned, there are about 42 different companies that are available if you're interested in purchasing a supplemental plan. And there's lots of reasons why you'd want to do that. And again, we have a whole web series on this. It goes way more in depth. It's our Annuities 101. You're welcome to view that. I'll put a link up in the corner. So each district has a different TPA or plan administrator. For most districts that I'm aware of, it's SchoosFirst Federal Credit Union. You can go on their website and find this list of all the available companies that are district approved through them. If you have a different TPA, you can go to your payroll department and ask them if you're not sure. But keep in mind, if SchoosFirst is your TPA and you use them as a credit union or bank or what have you, and you go in, to make a deposit or talk about different plans they have, they might try to sell you on their own TSA mutual fund plan that they have through Nationwide. So keep in mind that kind of anywhere you go, you're being upsold. So just, make sure that you're aware that's not your only option and there are other options available. I'm not saying anything bad about this plan. I'm indifferent to it, if you will. But just keep in mind that it's not your only option. Additionally, if you rely on the California Teachers Association for good information and recommendations, they also endorse their own plan, which the CTA president, E. Toby Boyd, markets on their own website as low cost with no sales fees and is monitored by experts. What that really just means is it's managed. It's actively managed, actually, by a hedge fund, just like any other mutual fund is. And, these people don't work for free. They're getting their fees, or their commissions, rather, from somewhere. So just keep in mind that it's not free, and it's not really that low cost when you compare it to some options that have no cost and might actually have a better return for you. In reality, this is just another risky mutual fund, which offers zero protection against market loss, and it has no retirement income guarantees, just like the other options I mentioned. Again, if you're not familiar with annuities or mutual funds or the different options you have available, we get into this in great detail in our Annuities 101. We'll go over what an annuity is, how to choose the right company, the different tax implications, and also the different tax codes that are available depending on what you do for work, as well as the passive versus active investment options. Really important that you understand the differences between these before you decide on going with one company or another, or one product or another. Okay, so questionable relationships. In addition to everything I just mentioned, your own school, district, or union may have a special deal with one or more TSA providers, allowing them preferential treatment or even exclusive access to staff on campus. These companies often will even pay for substitutes to cover class each year, while sales agents are allowed to solicit staff one-on-one in a high-pressure environment. They pose as officials endorsed by this district superintendent when in reality, they're just salespeople there to sell you products that you may or may not need. So, for example, American Fidelity enjoys exclusive access to many schools and many districts in California and also in other states, simply because they offer Section 125 plans to districts for quote-unquote free, which takes the financial burden and responsibility off the districts for issuing that plan. Because of this gift, American Fidelity is allowed an open door policy to solicit their entire catalog of insurance products to unsuspecting staff on campuses around the country each year. Now, I've been to several schools all over my area, and I swear American Fidelity is like the number one company that you see. Or a lot of times I haven't even been allowed on campuses because they only allow American Fidelity on campus. And when asking them why, they refuse to tell me, or they might not even know, because the district superintendent makes the rules. And they have a sweetheart deal with this company because of this reason, the Section 125 plan that they offer. In my opinion, it shouldn't be allowed. I think that schools and teachers and staff should know what their options are and know why their particular school might have a relationship with this or another company. It gives them the thought that this is a vetted company and they offer good competitive products, when in reality, that may not be the case. Okay? And, just to hammer the point home, these are the official financial ratings of American Fidelity. They're not the best. They're not terrible, but, they're not even rated by Fitch, Moody's, or Standard & Poor's, which I don't understand why they wouldn't give them a rating, but they don't even have ratings for them. But yeah, it's not the best rated company. There's other companies out there that have way higher ratings. And why do they endorse this one versus others? It's something you might want to ask. Also, if you want to see all the different companies that are available in your district and, compare them yourself, or you're able to do that at 403bcompared.com. You can just go in and find your employer, and then it shows you all the different companies that are available. You can click on them and find the products and get little descriptions about what the products are. They're not fully descriptive. They're kind of like just basic descriptions, and sometimes they're not updated. So in my opinion, the best way to really find out what's out there and how to compare is to talk to a broker, someone like myself who's knowledgeable about what's out there, what's recent, because every year these plans change and their incentives change and their fees change. They're all very competitive with each other. So depending on market conditions, some can offer better options than others, and also depending on their financial stability. All right, that concludes this presentation. If you'd like to learn more about our services or would like to schedule a free consultation, please visit our website at setsailins.com. Thanks, and have a great day.